Thank you for joining us today for the open banking session. I'm really pleased to be able to deliver this to you. So my name is Ruba Farah, and I prepared this session for you today on behalf of Lean Technologies. Lean Technologies is a Saudi open banking company. We've been around since 2019. We are active in 2 markets, in the KSA and the UAE. And in very simple terms, what we do is that we allow you, the user, as well as corporate users to connect their bank accounts to third-party applications to move money and also share valuable data insights from your bank accounts. So without further ado, I'm going to begin. So the agenda for today is as follows. We're going to start talking about open banking, introducing the concept, and then talking about what drives the open banking evolution and how open banking is used. Then we're going to move on to talking what it means for the KSA's fintech ecosystem, and also what's next, what happens after open banking. And then, of course, it would be my pleasure to answer your Q&A. So what is open banking? So the word open refers to a shift from a closed ecosystem where you as the user had a one-way relationship with your bank and a very straight line to the way you interacted with banks where they administered financial services on your behalf. And a paradigm shift in that and moving on to an open ecosystem where financial services have been unbundled into many different services, right? With the customer sitting at the middle, in the middle of all of that ecosystem, right? So like all these ecosystem players are now thinking of how better to serve you as a customer, including banks. So it gives the customer the right to determine who has access to their data and who can initiate payments on their behalf from within their bank account. So let's talk about what it was like before open banking and after open banking. I think this will help explain the concept a bit more clearly. So before open banking, banks had a bit of a monopoly over customer data, right? So they held years and years of transaction data on you from your bank account information. What open banking has done is that it's put control of that data in your hands, in the hands of the customer, to do what you please with it, share it with who you please, right? So that you can get the service that you choose and in the best possible way. Again, going back to before open banking, a closed market that stifled innovation, right? Because there were much higher barriers to entry because other players, it was much harder for them to enter the market because they didn't have the level of access and the ability to move money around on your behalf. What we have now with open banking is a very competitive landscape and an innovative market with you, the customer, at the center. Everyone working for you to ensure that you have maximum utility of your financial services. Now, moving on to the payments side of what it was like before open banking and after open banking. So customers had to contend with poor payment flows in third-party apps. And now what happens with open banking is there are short payment flows with much fewer drop-off rates because the user experience is just so much more elevated. We all use cards online, and cards are a seamless way to move money around from your bank account, but they're also a very expensive way to do so simply because there's so many different players, right, involved in moving that money around. So what open banking does, it allows you to move your money from your bank account from within a third-party app straight to that third-party app, right, with minimal or zero fees. Now, it's really important to look at open banking as an ecosystem, and it is an ecosystem, enabler with various players in it. So in order to get that service to you and in order for you to get better quality financial services, there are so many different bits and pieces at play here. Starting with the banks, right? The banks are guardians of your data. They have so much valuable information on your data, financial insights on you. And also they are the trusted party that are regulated to hold your deposits. Now, technical service providers, i.e. TSPs such as Lean, are the rails that enable the movement of that customer information and those deposits that you have in a bank across the ecosystem, right? So we build, if you want to think about it this way, we're essentially the pipes that allows that seamless movement from banks, right, over and directly from us to third-party providers. Third-party providers is the technical name for all the fintech apps that you love to use, such as Kareem or Tabi, etc. So these third-party providers can either use your data, right, with your permission, always with your permission as a customer, or enable you to move money directly from your bank account across to their wallet, for example, seamlessly and easily. Some third-party providers can provide AI account information services and payment information services, i.e. can leverage the data side and the payment side of open banking, but sometimes third-party providers will only leverage one, depending on the use case. We'll dig into the use cases in a second. So open banking use cases, what does it actually enable for you as a customer? So it allows customer-friendly affordability checks. It allows efficient credit risk assessments, expense management tools for businesses and individuals. So smarter and easier onboarding and KYC flows. Usually they're quite administration intensive. This helps reduce those timelines and that burden. Also identity verification and AML detection. And finally, it's a cost-effective alternative to cards. And we touched upon this by saying that account-to-account movement of money is a lot cheaper than card payments. So looking at a few examples here, credit scoring, if you look at the graphic on the right, essentially you as the user can permit the TPP, which is the fintech, to request from Lean to access that data that you hold at the bank, right? So that data is transmitted back to the fintech in order for them to conduct a credit risk assessment. Right. This is a really, really critical use case for open banking because it allows greater financial access. So a lot of unbanked and underbanked people or people with really thin credit files are able to actually fill the gaps in their history or improve their chances of getting a loan or getting a better rate on a loan. Moving on to account payments. So again, like, you know, the ability to move money from your bank account from within a third-party app without leaving the application is really such an incredible use case for open banking. Onboarding and KYC is the same. Banks have a treasure trove of data on you. Sometimes they know you better than your family. So getting that KYC data across from your bank to third-party applications can definitely cut costs and can get you online very quickly, very easily, and make the experience a lot easier. Name verification is also very similar in that sense, in that it allows for AML purposes the ability to confirm with your bank that you say you are who you say you are. And this is quite important in use cases such as insurance, for example. So what drives the evolution and utility of open banking? So we're getting to the exciting part now that we've introduced the concept. So what drives the utility and evolution of open banking? First and foremost, you, the customer. Customer expectations have been evolving substantially and at a much higher curve since COVID hit us all. And now we think of financial services very, very differently, and we'll go through this in a second. Competition. Competition is a really critical factor. We now have banks, we have non-bank financial institutions, we have banks stepping up their game. So competition is also what is driving the way that we use open banking and how it evolves. Also regulation. SAMA, for example, is very active in rolling out the program and ensuring it is successful. And finally, technology. Technology and its evolution over the last decade or two has really enabled us to offer open banking and to actually continue to grow its functionality. So customer expectations. So what do we expect from our financial services now that makes open banking relevant? So we expect wider optionality, right? So with open banking, the cost of onboarding a customer and time and efforts to get them to have more than one financial service is significantly reduced, and it's made a lot easier. So that's one thing that's really critical. Moving on is context relevant services. So by understanding your needs and your wants through open banking data, you can be offered tailored services that are very suited to you and at a price point that is suited to you. Then we move on to the unbundling of financial services. So we no longer use just our bank, right, for financial services. I myself use maybe 5 or 6 applications to get my financial affairs done. I think of user experience, I think of the best rates I can get, and I think of how quickly I can conduct these services. Obviously, digital channels with better user experience are really, really important. So a lot of you might be aware of Revolut in the UK. Revolut was really a game changer in the UK because their user experience and their interface was really unrivaled, and it really helped elevate the whole industry and the way that it interacted with the customer through its interface. Finally, our expectations are very, very high in terms of expecting 24-hour frictionless service. And in more evolved markets from an open banking perspective, and not just because of open banking, but because of the development of financial services and the digital channels in general, average visits to the bank branch have fallen to 4 per person per year. That's absolutely incredible. I remember a time 20, 30 years ago when my father used to go to the bank, like, I don't know, 3 times a week. So moving on to regulation. Now, this is a really, really interesting one. So for many, many years, regulators were watchdogs, right? They were policing the financial services landscape. What regulators are now doing is actually wearing more than one hat. They're thinking of how they can ensure that financial services are conducted safely and within a certain framework, but they're also drivers of innovation, right? So the regulator's role has really changed, and along with that, all this new innovation that is happening, the regulator is now jumping in and thinking of the responsibilities and the changes that need to happen. So if you look at the timeline below, you'll see that in a more advanced market in terms of implementing open banking, such as the UK, this wasn't an easy, journey. The regulator had to be involved at so many different stages to drive the progress of the regime in the UK. And it wasn't until 2023, i.e. this year, that the implementation agency in the UK announced that it successfully completed the implementation of the open banking roadmap. So it took them quite a few years. It took them nearly 8 years to get that sorted, right? We have ways to go in the KSA, but we are learning and we are doing things in a context-specific way, and all signs show that we are going in the right direction, and inshallah, we can implement it in a much faster timeline. So just honing in on the KSA and what's been happening here from a regulatory perspective. So SAMA has really, really taken the lead here in the KSA and has developed the open banking program. It is one of the initiatives of the Fintech strategy, which falls under Saudi Vision 2030. So what does it actually entail? It is actually a very complex set of different components. It involves new regulation. It involves implementation of standards, rules. It involves the implementation of technical standards as well, in addition to ensuring that there is enough awareness and communication in the industry. So it has been no easy feat, and by all means, SAMA has been really incredible at leading the way. Competition is a huge catalyst, right? In the financial services space. So the rise of non-banking financial services has really stretched that sphere of competition. So previously, banks only had to compete with one another for the customer. Now banks have to compete with one another as well as non-banking financial institution, payment service providers. So this has been a really interesting shift, which has resulted in really all the players elevating their game. A really interesting study, which I really suggest you read after this session, is a study that was published in 2002 by Stanford and Columbia, and it indicated that there was a direct correlation between the implementation of open banking and a rise in VC investment, up to 50% in some markets, right? And just for clarity, the rate of VC investment in absolute dollars is considered a key indicator of the startup and fintech scene in a country. So this is really encouraging and really promising for the future of Saudi. So technology, really last but not least, because it is the thing that makes this all happen. So the technology is the infrastructure that ensures your data and your payments move efficiently and securely as a customer. So APIs are application programming interfaces. In very simple terms, that means it is the channel, it is the component that allows all the complex stuff in the background to sort of sit in the background and allows different systems with different interfaces to talk to one another, right? So this allows banks and fintechs to plug into APIs so that they can quickly go to market. This is also how Lean, for example, communicates with third-party providers, i.e. your fintechs that you use. Microservices. So microservices have been a huge driver in the advancement of technology and open banking. What that means is that developers are now able to use different bits of technology, combine them to create platforms that are useful and specific to their value proposition. The scalability of tech is also a very critical factor. So cloud technology, for example, has allowed technology to become a lot more scalable. And again, last but not least, security. So technology is absolutely critical in ensuring the security of the open banking ecosystem. So, for example, it is technology that can limit levels of access to your information and the ability to move money on your behalf. And it enables you to revoke permissions from a fintech at any time, or from a player like Lean to move your data or your money around, right? So it allows you to have complete control and allows us to have that audit trail of where things are moving around. It is a critical factor to success of the ecosystem, and I cannot stress this more. So what is next? I know we're still at the beginning. Open banking is a relatively new concept, and we're all working hard to make it a success, but it's also really important to stay aspirational and think about where we go from here. So right now we're at the yellow dots. And the next natural step is to move into open finance. What does that actually mean? So open banking right now, as we discussed, is about moving that, extending that bank functionality into third-party applications, right? And when we move on to open finance, we're talking about different financial services also coming in, not just limited to banks. So it's about sharing data or moving money around from pension, insurance, investment schemes, asset managers, mortgages, wealth management, etc. And then after that point, there's also open data. And that is also a very critical and very complex step in the evolution of open banking. So that is about the involvement of telco, getting your healthcare data across, getting retail data across, social media. So it is actually a much bigger world. But I mean, all of us can see how we can use all this data and aggregate all this data to really end up with very useful and very interesting use cases in the future. So while this is all wonderful, it is obviously not very easy to implement, but not impossible, of course. And it is always really important to stay positive and think of how we can move forward. So while open banking initiatives remain in the very early stages of implementation, a lot more needs to be done by the ecosystem to raise awareness and reach scale. So today's session is one such example. So I really urge you to talk to your friends, your colleagues, and your families about open banking and what it can do. Sometimes sharing of data can be a concern in using that. So dig deeper into how open banking secures your data, dig deeper into how SAMA has regulated for that, right? Increase your knowledge so that you can increase other people's knowledge so that we can innovate faster and move on to the next stages, right? Into open finance and open data. So even in more mature markets such as the UK and the EU, the move from open finance into all the way into open data requires the interoperability of very different industries, right? So a lot needs to happen in a very incremental way for us to get there in a safe and seamless fashion. And what will happen, I guess, when we get there is that your relationship with organizations and companies that you deal with will significantly change, right? And your expectations of them will change. Also, the distribution of risk and liability between firms and players in the ecosystem will really change. So that involves really careful thought from the regulator as we go forward. So, open banking trends to watch. I know everyone loves to talk about AI and machine learning. So there's always room to combine different technologies to produce really wonderful results. So if we wanted to get to a stage of cognitive banking, there's a lot of things we can do with open banking and AI. So for example, when you extract eKYC data, what artificial intelligence and machine learning can do is that it can sort that data, categorize it, and actually combine it with other data to create insights. And that what that leads to is, as we mentioned, cognitive banking, which is an elevated state of banking services provision. Now, looking at blockchain technology with open banking, the use of smart contracts can really help you take advantage of certain use cases. Thinking here about exchanging money, for example, if you were to have a smart contract in place, you could ask for money to be moved around and to execute that FX transaction, automatically enabling a company such as Lean, for example, to make that transfer on your behalf when the strike price hits so that you can take advantage of that movement without actually just sitting and checking your phone constantly, making sure that the exchange rate is right for you to change. So thank you very much. That was me, and I would love to pass it back to Sagar to answer any and all of your questions.
Thanks a lot, Riva. That was awesome. That was really insightful. There's a lot of information there. So the slides and the video for this recording will be shared so that you can go through that. There were a lot of terminologies. I know we got a lot of questions about TSPs, AISPs, PISPs, TPPs, but I think we've covered most of them. But if I just summarize some of these questions which we're getting, let's talk about open banking as a concept to begin with. So we talked about the customer owning their data, and that's essentially what open banking is about. How, as a customer, how do you give your consent? Who do you give your consent to? How do you revoke that consent? Is it the banks? Is it the likes of Lean? Is it the TPPs? What's the customer's journey in all this?
So a lot of this is very complex stuff that SAMA has given a lot of thought to. So there are very specific regulations of how you can of how you give that consent and how you revoke that consent. For example, Lean, whenever it transports your data or initiates payments on your behalf, you will always see a permissions page that comes up and tells you, hello, we're intending to use your data in this way and that way. Do you consent to this? for your information, you can revoke this consent at any time. So it is a very explicit way of giving you that control over using your data and payments from within an open banking context.
And you mentioned data and payments being sort of the two strands of open banking. Is there anything else, or are they the sort of two strands which everything is built upon?
That's very, very interesting question. So those are actually the baseline use cases of open banking, and obviously there are a lot of value-added services you can build on top of. Now, as I mentioned, the journey is still in the early stages in Saudi Arabia, but so much is happening at the same time that I imagine it'll be a much faster trajectory to additional value-added services sitting on top of the core open banking services of data and payments. But we at Lean are also constantly thinking of how we evolve our service. So we are definitely including value-added services in our product roadmap, and certainly in other markets around the world, like TrueLayer, which is an open banking giant in the UK, provides many value-added services on top of its basic open banking services, and now monetizes those quite significantly. So there's a lot of room to grow and a lot of value to deliver to the customer beyond that core service.
If we think about the sort of the way I like to think about it, we've got the banks on one side, you've got the middleware or the technical service providers yourselves in Lean in the middle, and then you've got the TPPs on the other side. So I get the benefits for the TPPs, right? Because they're getting access to data they've never got access to before. What's the benefit for the banks? Why would banks willingly give their data that they've built up troves of data on customers out to third parties?
So I guess that is a complex question. I think that a lot of banks can, struggle with. Why would I give up my, my monopolistic position and my value proposition in the ecosystem? But I would argue that that's a short-sighted view of how you look at it, right? Because if you look at what open banking has done in the long run in more advanced markets, it has made banks more competitive, right? It has woken up banks to elevate their banking experience to be able to compete with these new advanced digital services. So what's happened is that now a lot of banks are consuming open banking data to elevate their services. And we're seeing that in the KSA. So it's really promising. And I think in the KSA, banks are really jumping on it. It's really important that banks have a plan for open banking on how they plan on utilizing it. Some easy steps that banks can take is giving customers, a unified view of their finances. It can connect to a lot of third-party apps and offer those services from within their applications. They can also build value-added services and monetize those and distribute those. So banks can be very active, and they need to decide what aligns with their strategy to ensure that they're not just spending money on all of this technology that opens up the treasure trove of data and the withdrawal holding ability, but also that they're active participants in the ecosystem. And I think this is what's the critical point here.
And I guess a commercial question which has come up is, how does everyone make money from this, right? So is it commercially viable for all the players within the open banking infrastructure to be involved in open banking? And if so, how do they all make money?
So open banking is about democratizing payments and the movement of data. It is actually, regulation controls and caps a lot of the payments and how you're pricing those. So the regulator is quite involved in that. And it is actually a much cheaper alternative than a lot of other methods, like I mentioned earlier. So it is cheaper than getting your data from a data bureau. It is cheaper than moving your money across a card scheme. So it is actually the cheaper alternative to move your money around. And this is why it is about democratizing that movement, right? Because it is a much cheaper, much more efficient way for you to do that. And, in the UAE, where we've had a longer experience with open banking, despite it being a market-led environment, is that what we've seen is with open banking services, we've actually been able to help support businesses scale, particularly businesses with very thin margins, like, for example, remittance businesses. They're able to, help encourage customers to move their money around using a service provider like Lean, making the experience cheaper for them and therefore cheaper for the customer. So, and benefits is it is cheaper for the customer to use these services.
It's not so much about making money, but it actually reduces the cost of operations for the participants in this. So if I'm a TPP, for example, my alternative being going through a credit card company charging me 2.5%, it would be cheaper for me to initiate payments through open banking than it would be through those means.
So I yes, in some cases, but no, in other cases, no, in the sense that it can actually help you make money. So some business models would actually not be viable without open banking. So it enables you to do things at a cost and grow your business and scale at a cost that makes sense in line with the margins that you can make in that business, right? There are some businesses that have higher margins, like for example, investment applications where okay, it's about lowering costs. When you're talking about a remittance business, like going back to the example that we use, margins are quite thin, right? If you're going to compete with banks who have like, you know, a more established service or the exchange houses, you really do need to do things quickly, easily, and cheaper. And to allow that business model to exist altogether, you do need a different set of inputs that includes the ability to move money around cheaply.
And just on the case studies you mentioned, I think there's a few questions understanding how does the credit scoring work? So I think that's just sort of explaining credit scoring in itself, but how does open banking help with credit scoring?
Absolutely. So your bank holds a lot of valuable data on your behavior and your history. So your bank typically knows how much money goes into your account every month from your salary. Your bank knows based on your current accounts, your savings accounts, and your credit cards, how much money is being sent. So you can do a spend analysis. So you combine a lot of different factors, and when you pass that information over to, say, a buy now, pay later, such as Tabi or Tamara, they take all of these factors into consideration into your credit score, right? So, for example, a buy now, pay later provider can get some data from the bank to see when you move to KSA. If it's if it's been less than 6 months, it might fall outside their risk appetite because it is too risky for them to lend to you. If they can see from your expenditure that you're actually really good at staying within budget, paying any loans that you have on time, you don't have 5 loans, you have like 1 or 2 loans that are reasonable, you know, a mortgage and a loan on your car, you become a better customer. So it's really about looking at insights and really not just looking at you as another number. You know, it really also establishes more trust in the data that you're passing along, because it's passing along data directly from the source, i.e. the bank, over to that lender to get that data on you and process it.
Thank you for that. Final question, just on sort of talking about the concept of open banking, is around the risk and liabilities, right? So the customer gives the consent to share the data with a third party. Now, if or I'll initiate a payment from a third party. Now, if that payment, something goes wrong with that, or that data is used in a way to provide a service which the customer didn't want, or is used in a way which the customer didn't need, where does the liability sit? Does it sit with the bank because they're the owners of the data, or in fact, they're the ones who provided, they're not the owners, they provided the data, or does it sit with the TPP, or is it down to the regulator to decide how that risk is sort of shared?
Yeah, it is actually one of the more complex areas of administering open banking, and typically it is the regulator that decides these liability models. Where the regulator doesn't provide for those are provided in contract, right? Typically, though, in any regulated environment, because the bank is the guardian of your data and the holder of your deposit, they're usually your first port of call as a customer. But you know, with advancements like open banking, banking services are no longer what they used to be, and that liability no longer sits with the bank only. It really stretches across an ecosystem. So it really is about informing the customer about what they're doing. So like, for example, that permission access we talked about, and that consent. So if the customer knows that they've consented to this thing, they know that, you know, what that means is liability may shift from one player to another. So I mean, while in certain situations there is a lot of liability on the bank because it is, the most heavily regulated party, no, liability does sit across the ecosystem as well.
Okay, cool. And so bringing this back to Saudi, where are we in terms of sort of open banking in Saudi? And what do you expect to see over the sort of next, say, 6 months or 12 months? And from a customer's perspective, what differences will I see in Saudi when I'm opening up an app or doing something?
Absolutely. So at the moment, just AISP and PISP are account information services. So that's essentially data services, right? Being able to extract data on yourself from your bank into a third-party application to enable the use cases we discussed. And payment information services are the ability to move your money from account to account and offer any other services as well on top relating to banking, such as payouts, the ability to refund, for example. So talking about what we are expecting, so and where we are right now. So what's happened now is that SAMA is rolling things out incrementally. So we're starting with data services, which are AISP, and players such as Lean are working very hard with the regulator and fintechs in the market to test all those use cases. So a lot of careful testing and planning is taking place. Things are starting to go live into the market in a more scaled up way. So what that means for you as a customer, for example, is that say you go on a buy now, pay later application, you will probably see a tab that says connect your account with Lean, and you're able to connect your accounts, and then you're able to get that more sophisticated credit check and spend check happening for you. So those are some of the changes we expect to see on the data side. We expect in early 2024 that payments will be rolled out. It's very hard for me to talk about what that will entail because the framework around that hasn't come out from SAMA, but we are expecting it to be a game changer really for how payments move around. We have a very modern payment infrastructure in Saudi, so I can only imagine what innovations will go on top. So we're really excited to see where that takes us as well.
And in terms of the regulations, has it been market-driven or regulator-driven in Saudi? And could you explain the sort of difference between the two?
Absolutely. It's been regulator driven in Saudi. But what's really interesting about the Saudi case is while it is quite similar to the way open banking has been rolled out in Europe and the UK, it is actually very country specific. And the standards are really, really country specific and really takes into account all the lessons learned and potentially some of the mistakes or missteps that took place in Europe, and really is rolling out a more evolved framework in the KSA. So it has been very much regulatory driven, and SAMA has been rolling it out very carefully and I would say very successfully.
And so what's the difference between regulatory driven and market driven?
Absolutely. So in the UAE, there is no formal regulation regulating open banking. So there are actors in play in the market who are undertaking open banking activities. So it is the different players in the market, the fintechs, the banks, and players like Lean, the TSPs that are working together without a formal framework. The difference in Saudi is that there are a set of rules, regulations, and technical standards on how you implement that. It's not to say that one is wrong and one is right. It's just different ways to go about open banking. So the US, for example, which is one of the most advanced fintech markets, has a market-led approach to open banking. In the KSA, obviously, the government has decided to take a more active role in promoting open banking. Now, one of the benefits of doing that is that you sort of force all the different players to sort of wake up and actually implement, upgrade their technology and be open to sharing data under certain mandates and certain timelines, which makes innovation much faster. And we know the Saudi vision has been really great at moving different industries to elevate their game, and really fintech is no different.
Great. And I've got actually some really good questions here about data protection. So that has to be at the heart of before open banking. You've got to have the right data protection regulations in place. So Are you able to talk just a little bit towards what those data protection regulations look like in the kingdom?
Yeah, I mean, look, data protection really, as you mentioned, sits at the heart of it. In order for data to be shared across, many different players, and for those liability models to make sense, all the different players in the market need a different set of rules and regulations that help them understand their roles and responsibilities in that ecosystem. So at different points, like data handlers are broken down into data controllers. So those are the people that control your data at any given time. So that would be the bank. The bank is a data controller, right? So they hold your data and they sort of are the guardians of it on your behalf. Lean, which moves the data across, is typically a transporter of that data across the ecosystem, right? And then the TSP that again then does stuff with your data on the other end is not just processing your data. It may be processing your data in some instances and maybe controlling your data in some instances. So I know this sounds very complex, but in order to make this work and for the liability model to work, you need a complex set of data protection laws. And I think generally they're quite difficult to wrap your head around. But if you think about the way it's been done in the UK, and it's been done quite similarly in the KSA, I mean, the European Commission issued the GDPR, which is which is now considered, the gold standard for data protection around the world. And it sort of changed the way that we think about data. Initially, it was considered extremely conservative and so prescriptive. But then really what happened is that it really helped spur innovation by helping people understand liability and where it sits in the ecosystem, because it's no easy feat regulating, many different players and their abilities to move data around in the ecosystem.
So just taking that one step further, can I, in Saudi, I have this data from all my bank accounts. Can I actually monetize that data? Is there a way for me to say, I own that data through open banking, and therefore, can I start charging actually the bank for using my data, or can I start charging third parties who want to get access to my data?
So nobody can do anything without your permission as a customer. Usually, there are companies that provide data insights. Typically, when they sell those insights to third parties, they're usually anonymized sets of data with no personal identifiers. So it's about protecting you as a customer. So they're more like insights that give you information on how spend behavior is in e-commerce, for example, or in a specific sector within e-commerce. But typically for your data to be processed into insights, it requires your consent and your knowledge, right? So no, it doesn't work like that. It is actually a very strict way of transporting your data, and people are very limited in how they can use it.
But so taking that one step further, do I actually own the data? So through open banking, am I now the owner of the data which the bank holds on my behalf?
You're the owner of the data. It's not the bank. I think before more advanced data privacy regulations, there was some confusion over who owns the data. Banks used to think they owned the customer data, but really banks became the controllers, i.e. the guardian of the data on behalf, like they're holding it on trust on behalf of the customer. They can do quite a lot of things with it for the customer and to deliver a better service to the customer, but there are limitations on that. But ultimately, it is about open banking and the data privacy regulations that really enable it are about making sure that the customer fully understands and the different players fully understand that the customer is the only owner of that data.
Okay, excellent. Looking forward then, so what do you think is the most exciting thing about open banking? If you think about open finance and open data, and you get into a world where you've got access, everyone's got access to everyone's data. Where do you think is the most exciting things which could come out of this?
I think talking to some fintech players in countries where there is no open banking regime or there's no market-led approach to open banking, there really is a yearning for these services. There are very high barriers to entry for competition. Innovation is not as easy to implement. And I think what's really exciting about open banking and what I expect to see in Saudi over the next couple of years is really a lot of innovation. while I expect innovation to happen from really day one, I imagine we'll be in a phase of sort of consuming and understanding how open banking is going to fit into the current ecosystem. But I can see a lot more innovation coming our way over the coming years.
Excellent. Looking forward to it. So a final question. We've got a lot of people here who are maybe learning about open banking for the first time. It's the first time sort of they've been involved in this or heard the concept. What would you recommend that they do in terms of learning more? If any resources you'd suggest that they look to?
Yeah, so a lot of companies have a lot of open banking companies have a lot of helpful resources online. So I would look at Lean's website, I would look at Tink's website, I would look at, so there's a lot of easy guides. Go on YouTube, listen to a video about it. Sometimes it's really hard to visualize because there's a lot of jargon. So sometimes really, the way I first understood open banking is literally by taking a big sheet and drawing all the players. So that really helped me understand. And I think once you eliminate that jargon, it is a lot easier to start understanding the different concepts and how it fits into different use cases. So don't be hard on yourself. It is not an easy concept. So really take a step back and keep going through the basics 1, 2, or 3 times and just keep reading. Eventually it'll start making more sense. And I think thinking about real life applications really is the key to helping it make sense.
On that note, I've got to give Lean a plug because you do have a really good open banking report on the